Very good morning and a happy Thursday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: oil moves lower, earnings roundup, and dollar weakness. US stocks closed lower Wednesday as negotiations over the fresh stimulus bill continued. S&P traded in a narrow range throughout the session but closed down 0.2%. The Dow also was lower 0.35% and the Nasdaq was down 0.3%. Nancy Pelosi and Steven Mnuchin made further progress on coronavirus stimulus package Wednesday and will speak again on Thursday. According to Pelosi's side, today's conversation brings us closer to being able to put pen to paper and write legislation, is what the spokesperson of Pelosi tweeted after the two negotiators had about a 48-minute call on Wednesday. The 10-year yields were up above the 0.8% for the first time since June. The dollar fell against every G10 pair. Gold jumped and Asian equity futures are narrowly mixed. Oil and gasoline tumbled by the most in over 2 weeks after EIA reported swelling fuel stocks and slowing demand. US gasoline inventories rose 1.9 million barrels last week, the biggest gain since May, while a measure of consumption slid to the lowest since late September ahead of the sluggish winter driving months. The report also showed a fifth straight weekly build at Cushing. On the earnings side, Chipotle Mexican Grill on Wednesday reported quarterly same-store sales growth of more than 8%, but a shift to delivery is boosting cost and resulting in fewer drink purchases, which dragged down its overall net income. Shares of the company fell about 4% after our trading. The company did mention that digital sales more than tripled during the quarter. Executives said last quarter that they don't expect normalized earnings and margins to return until fourth quarter. Tesla reported third quarter results after the bell on Wednesday. The stock rose about 3% after hours as the company beat expectations on EPS and revenue and reported its fifth consecutive quarter of profit. So earnings per share came in at about 76 cents versus a 57 cents expectation. Overall revenue was 8.77 billion versus 8.36, and the net income came in at about 331 million versus a 394 expectation. The company already reported that it delivered about 139,300 vehicles during the quarter. That's a new record for Tesla. It stood by its delivery target of about 500,000 vehicles and said that its new factories in Berlin and Shanghai are on track to begin production next year. In other results, Las Vegas Sands lost less money than expected and said the recovery process from the pandemic continues in each of its markets. Shares rose post-market. Abbott boosted its full-year EPS guidance. Profit and revenue beat as global COVID-19 testing related sales were at about 881 million. Biogen cut its guidance for the year as one of its drugs missed estimates, but the third quarter earnings beat. Thermo Fisher's adjusted EPS and revenue topped consensus. Verizon raised its guidance as adjusted EPS exceeded expectations. On the FX side, House Speaker Nancy Pelosi is optimistic about getting a relief deal done by the end of the week, but investors are also worried that she's just dangling a carrot and used to distract the Republicans from the election. We'll know soon, but merely the possibility that she really doesn't want a deal until after the election is one of the reasons why investors are starting to dump dollars. The Fed's Beach Book report didn't help either. According to the Fed districts, economic activity improved at a slight to a modest pace only. Meanwhile, despite a raging second virus wave in many major Eurozone nations, the euro is on a tear. It's almost hard to believe that the euro USD hit a 1-month high on Wednesday. Some of the biggest countries in Europe have implemented new restrictions, and even outside of curfew, Europeans are staying home as much as possible. This behavior will undoubtedly weigh on growth. The 10-year German-US yield spread also hit a 7-month low, which should drive the currency lower. There are some comments suggesting that ECB is not ready to ease, but if economy freezes up from a second wave, they will have no choice but to come and take some additional action on the monetary side. The only reason why euro is strong is because it's attracting demand from investors selling dollars. So it'd be interesting to see how this thing plays out in the next couple of days. That's the update. Stay safe and healthy, everyone, and speak soon.